Good morning, all. How are we doing? Morning, Paul. Morning, Mumble. Morning, Robert. Morning, Pleiades. Trading Hub, FTNet. It's time. Joe, morning. It's a very good logo, Joe. Logo, icon. Nondescript person with no face. Very good. How are we doing? It is Monday. It's the beginning of a new month. Markets are open, but not very volatile this morning. We've got very little movement at the open. FTSE's literally going nowhere. DAX is going nowhere. So we'll see what happens this morning, but it doesn't look like there's going to be any trades, to be honest. It's very, very quiet. So I got something in my eye. And no, it's not an eyeball, before someone says that. So we'll have a look at the news this week, see what's coming up. Great day on Friday. We'll say great day. It's a good day on Friday. Did 3K Friday. So got back some of the loss from the day before, which was good. So still up very, very nice on the last 4 weeks. But very, very quiet today, isn't it? Look, dead. Absolutely no movement. So we'll have a look through the news this week. Not a lot. Summer trading on. Yeah, it might be. There's no. It's very, very little news today, this week, as you can see. So it's the shortest calendar I think I've seen for ages. So today we've got CPI for the Swiss franc. We've had CPI for the Swiss franc. That came out as a 0. We were forecasting a much worse number than what we got. So that's obviously bullish for the Swissy. However, if you look at the ADR dash, we have got some. Oh, it has moved now. It didn't move when I looked before. Yeah, okay. So it has moved now a little bit. So we had a push down basically, and it is now just up at ADR. So it has had some movement. Yeah, okay. So a bit of a push against the Swiss franc. Obviously, that's negative move for the Swiss franc. Would expect it to be the other way around. Yeah, negative move for the Swiss franc. Anyway, we got a 0. It's lower than previous, but it's better than forecast. I would imagine that would normally be a little bit more bullish for the Swissy, but the market seems to be having a negative reaction to it this morning. But anyway, so those UADRs, not really particularly catastrophic. It's a bank holiday in Canada today. Lucky you. Tomorrow we've got PMIs for the US, and we've got the unemployment rate that's really into Wednesday morning for the New Zealand dollar. Wednesday, totally dead news day. Thursday, we've got the Bank of England rate. We're forecasting a drop down to 4%, which is likely to happen. We've got unemployment for the US dollar, and then we finish with the Canadian unemployment rate on Friday, which is forecast to go up again. So that's it news-wise this week. So Thursday really is the day this week. Unemployment claims for the US and the interest rate for the pound. So that is bearish pound. I think we probably are going to get that. It's hit and miss at the moment with what's going on with interest rates, because inflation is still sticky. We're not where we want to be. But they have got to get that down. So I think it's going to happen. This might actually be the sticking point this week. We may well get more votes for a freeze than a drop than we were expecting. So that's kind of the number, I think, which is going to be impactful this week for the pound. But that's it. So there's your news this week. Weekend-wise, obviously Trump has gone mad on tariffs again, and he's getting super aggressive with Russia. Stuck a couple of nuclear submarines off of Russia's coast. He's obviously given them 10 days. He's now having a go at India. A top aide to Trump on Sunday accused India of effectively financing Russia's war in Ukraine by buying oil from Moscow after Trump escalated pressure on India to stop buying Russian oil. India turned around and said, screw you. No, not interested. We'll do what we like. You're not our boss. So now he's upset with India as well. I would imagine there's more tariffs going on India at some point. What Trump said very clearly is that it's not acceptable for India to continue financing this war by purchasing oil from Russia. Deputy Chief of Staff, White House, blah, blah, blah. So basically, he's now upping the pressure on India and Russia. So he's got bored with tariffs, and now he's moving on to something else. The upshot of last week's news was that we're going to get an interest rate drop in September for the dollar, which is pretty much a given. We kind of knew that anyway, so it's just been a bit more confirmed. But yeah, as you can see, it's now all becoming all about oil. So yeah, busy old weekend. I have ordered 2 nuclear submarines to be positioned in appropriate regions near Russia. So yeah, this week could be interesting because obviously there's no news, but there's going to be a lot of Trump announcements, probably annoyance as well. So we'll see where we go. But short on the DAX, short on the FTSE. So the range on the FTSE was big enough, just about over the minimum. 15% of ADR is what I'm using. DAX too small, so we should hopefully get a 15-minute ORB. Might get a 10. No, not going to get a 10 at the moment, but hopefully we'll get a 15-minute ORB on that one. But short on the FTSE anyway. Right, so that's your news for the week. As I say, it's very sparse. That's what's happened over the weekend. Oil price at the moment seems to be holding. It's actually rallying again now. So obviously what happened last week, obviously with all this stuff with Trump was that. Yeah, so we were expecting oil to rally again. What Trump's done, in effect, is dump oil prices temporarily. Now, I don't necessarily think that that is going to be the direction. So I'm looking at this at the moment as just a pullback continuation move. So I have got my TP set there to get me out of oil. I'm fed up with it. I've been in it for such a long time waiting for this pump. So I'm just going to get out, basically. So if we push back up into propulsion, which I think is even if we're going to drop, we should hopefully push into propulsion. I'm going to get out of it. Obviously, that is the day that it will fly. We will break that high and we'll be up at 300% of ADR because I'll get out. But I've had enough of oil. I'm just going to get out of it now. So your ADRs today are Aussie dollar Swiss. So this is all to do with the Swiss franc news. I don't think that's particularly the right move for this at all. These look to me to be good mean reversion opportunities. CAD Swiss, same thing. No reason why that shouldn't do that. Euro Swiss, we should be pulling back on that one as well. It's not quite getting there, isn't it, on the hourly? I might short that. Already come off of ADR. I can't get reversal alert on it because of the size of that wick on the news, but I might give that a little bit more time. Pound Swiss. Yeah, so that's extended into propulsion. And New Zealand Swiss. So yeah, all of these moves on the Swiss franc, not necessarily where they should be going. Everything is pushing up against the Swiss, meaning the Swiss is bearish. Obviously, the news that we've had this morning is bullish because it is better than forecast. Although it is lower than previous, we were forecasting it to be much worse. So the market should have factored that in, which means the market should undo the move that they've got wrong, which is the opposite direction. So we'll see what happens with those. The other main ADR you've got today is the Aussie New Zealand. Now, this one obviously is got this massive rally that started last week. What happened to my pen? So we're up in propulsion at the moment. Extended on the ADR, back up in here. We are trying to break out of this high, which we've just done today. So easily we should get a pullback on this, I think, but equally it could just rally up and test last month's high. So if it does get up to there, that would be a good looking short. I'm already short on this. I'm not far away from average on it. I can't get out because it's just gone sideways for weeks. But there's been multiple exit opportunities I've had on it. So if it gets back down into this propulsion gap again, I think we're probably going to be coming down here. There's no reason for the Australian dollar to be this strong. So I think this is just a temporary sort of move until we come back down. So retesting those highs or just literally coming out of that propulsion again for the third time. Not a bad looking RSI extension. And obviously that was from last week, from Friday. And obviously you've got an ADR today. So those are your ADRs. That Aussie New Zealand, very nice extended, almost up to 150 today. You've had your reverse alert on the 5 minute, which is super, super, super tight up there. Depending on your broker and obviously what they painted those candles at, that might have been your reversal alert there as well. So this is kind of the retest on that M pattern reversal. So it looks good. RSI extensions, you've only got €2 which is extended to the upside, sorry, on the 4 hour from Friday. So that's a very nice extension, back up there again. So yeah, looking for a pullback on this one. So watch for pullback into there if we're going to continue in that direction. But obviously, if this is a bear move, we've just broken that low. This will be your lower high. So you should be putting in a lower low. And Euro New Zealand, again, extended to the upside. So again, no reason why this euro should be so strong. So continuation to the downside. That has just broken up a new high. But if you look at that high, should be coming back down again. So very nice extension on the 4 hour there. So two good opportunities to enter new shorts if you want them. So 15-minute opening range break is on the DAX. Going to get hedged, aren't we? Yep, hedged. Okay, so long DAX, short FTSE. One of those is going to stop out. Look and see which one it is. So looking at where we're potentially going today, we'll have a look at the US indices in a minute, because obviously this DAX tells the story of the US indices as well. At the moment, basically, we are in free fall. Let's look at the US indices now, actually. So there's your Dow. We're saying with 6 days, 1, 2, 3, 4, 5. This is day 6. So 5 days straight down on the Dow. S&P, 2 huge down days, very, very big down days on the S&P. NASDAQ, very much the same. Yeah. So the markets obviously are in free fall at the moment. If you look at this on an hourly chart, you can see what's happening a lot clearer. So this is the end of kind of a parabolic run, or 4 hour chart's not too bad either. But on the hourly chart, yeah. So we've had this grind that's been going on for pretty much a month now. This is basically undone in 48 hours. We've undone probably 80% of the entire last month's move. So huge sell-off underway here at the moment. When we get these big sell-offs, we tend to start getting more volume and more distance and more speed, and everything just accelerates. Basically, ADR goes up, ATR goes up. So there's very good chance that we might get a bull day very soon, which will be of similar sort of size to what we've just had. Whether it's today or whether it's not, we don't know. But you should undo some of this move. The question is, are we going to start to go into a temporary down leg? We're coming into summer trading now. So summer trading tends to be very tight, tends to be very contracted. However, that is normal when there is a normal market. At the moment, we've got Trump fighting Russia, fighting India. We've still got what's going on with Israel. We've got the trade tariff wars still in place. China hasn't been sorted out yet. So, you know, this market is driven by stocks, and obviously stocks are business, and business is massively affected by all of this stuff. So while it's summer trading and we've got light volume and light liquidity, if there is something that drives the market, you get much bigger movement than normal because there's less liquidity in the market. When you get high volume and low liquidity, you get slippage. So you get bigger moves. So a lot of this stuff at the moment that we're seeing, we could see some very big days coming in over the next week or so, obviously depending on what Trump says. So if we are starting to pull back, which it looks potentially like we may be like trying to start to undo some of this last sort of quarters move. This is going back to April now. We're just going to sort of start to cascade down. So this area here is the last accumulation, which is around about 300% of ADR. So you've got a good chunk of movement basically to the downside before we start to meet the most recent sort of support. But this is very grindy. So if you look at the other indices, the DAX and everything, we're all going to get dragged down by this and affected by what goes on in the US. So today, potential for pullbacks up into here, which is 125% of ADR. It's going to take a lot to get there. But anywhere in the last sort of days worth of price action, you could find a continuation sell. So we come back down into this gap fill, which is done now on the DAX. So there's absolutely no reason to go any lower because the gap fill's complete. So it's just basically looking at seeing if we're going to bounce up. So target wise to the upside on the DAX today, you could easily go anywhere you want to. So we are broken along already. So upside target, obviously, for me, at a 2R basically is just kind of that little bit of a blip there before we went into the New York side of things. So that's your Globex high. It's not really Globex in the DAX. It's just the high before the market opened. But so yeah, that's an easily achievable target. But if you look at the bigger picture on where we could potentially go on the DAX, you're looking at coming all the way back up into here. So this is sort of Friday's open, and then we obviously collapsed down. That's the actual open there, but that's the sort of the close, if you like, the pre-market movement. So that whole section there really is a gap. So there's a lot of upside before you're likely to meet some downside resistance, which is what we had at the open there. So either there today, which is where TP is. So that's one ADR, or just coming around about yesterday's open or Friday's open is easily an achievable upside target on that today. Downside, obviously, if it does decide to break down, you're going to look and test Friday's low, which is an easy target to the downside. And the FTSE, very much the same with the FTSE, except we're a lot more range bound, as you can see. So upside target would be weekly high, monthly high up there, but I would be, in fact, we've already done it today, haven't we? That's Friday's sort of open, if you like, or pre-market open. There's the gap between the open and previous day. So that's what we've already tested really this morning, and it's rejected that. So I suspect we're going to come back down and test the low from Friday, which is last week's low. So easy target to the downside there. That propulsion gap is part of a V-shaped recovery. They don't tend to be anywhere near as effective as the sort of actually part of an A-shaped recovery. So trying to find one that's decent. There isn't a good decent propulsion gap. There's one there. Obviously, when you're breaking an accumulation, those are decent propulsion gaps. They tend to get retested. V-shaped recoveries are basically just undoing of previous moves, so they're nowhere near as effective. So that's your target to the downside on the FTSE. So we'll see where we go on those. But unlikely, both say unlikely, at the moment it seems to be happening, but it's unusual for both of these trades to work out. The DAX and the FTSE tend to go with each other. The fact that we are rallying against each other is unusual, but the FTSE is very, very, very hard sell-off. It would be very unusual to hit target in both directions, in the opposite direction on both. But it seems like it's having a very good go at it this morning, so I'll take it. Who knows? Took a random buy on copper due to the big move last week. I don't know about copper. Trump did something to copper, didn't he? Put the price of it up. I think he put some tariffs on something to do with copper. So yeah, I have no idea. I haven't even got copper. Don't trade it. So can't help you with that one. selling off really hard. This is your pre-market high. This is all broker data, so ignore all that. But we are kind of getting to an area we sort of sold straight off from this morning. That is coming down so hard. I can't believe the DAX isn't going to reverse along with the FTSE. 1,300 take. I'm going to partial the FTSE. Got 1 minute left on this candle, but I'm just going to take a partial on the FTSE there. Because I get the feeling if this does continue, that's just going to get dragged down. So doesn't make sense. There we go. Doesn't make sense not to take partial on it. I'm not going to get one. Look. We'll pull him back. So I'm just getting ready to get out of the DAX because DAX looked like it was about to drop, but it's actually held now, and the FTSE's pulled back. Very unusual for these to go in the opposite direction at the open, to that extent anyway. So one of them's right, one of them's wrong. You just got to try and pick which one. Morning, Virginia. How are we? Right, there we go. Partial taken on the FTSE. So just going to protect the second half of that break even. And then obviously DAX is the focal point really. So 500 banked. Obviously the risk on this is 700 and 25. So that obviously puts me into negative territory. So we'll see where we go. So if that comes back and stops out now, that's fine. It means that in theory, if we pull back hard on the FTSE now, the DAX will probably get some relief and be able to go. But they're both struggling at the moment. This type of market is just typical sideways market. The orders are going in based on whatever stocks are obviously being traded, but there's no sector purchasing going on. That's what makes the indices move in the same direction. You've got different sectors of stocks that all get purchased at the same time, which is tend to be what investment banks and pension funds and that sort of thing do. So this is why you tend to get the markets moving in the same direction, because the consensus is bullish or bearish, and therefore you buy or sell sectors of stocks at the same time. When you get them diversifying or divergent like this in the opposite direction, it's usually individual stocks or small groups of individual stocks which are getting pumped or dumped. It's temporary. And then what will happen is normal market structure will resume and one of them will take control and they will both then go in the same direction. So when you see that type of price action happening, it's flip of a coin. Which one is going to take control? One of them will take control. It's exactly the same as happens with the S&P and the NASDAQ. So if the NASDAQ and the S&P take off in different directions, something's wrong. So there's either individual stocks or something is driving one of the indices in the wrong direction. When that order is complete, it will just flip back the other way or the other way. So one of them will take control. Yeah. So you don't tend to find them going in, price action is normally virtually the same, but at the open it is different, but it's usually directionally the same. Same with the FTSE and the DAX. Although they're very different indices, the market is either bullish or bearish usually. So normally going in one direction or the other. If they continue to do this, basically neither of them will get anywhere. So you're just going to accumulation on both. They just won't be able to move. So one of those will go. For me, it doesn't matter which one. If that comes down and stops out, that's going to continue and make profit. If that one pumps and the FTSE gives up, that stops out, this one hits target. Win-win. So basically what I've just done is created kind of a win-win scenario by taking that partial early. that would be the preferred route today, but we'll see. Right, anybody got any FX pairs they want to look at? I'm off out today, so I have to go and get things done this morning, unfortunately, so I can't hang around for too long. But if there's any FX pairs you want to look at, let me know. There's not much else to look at on the RSIs. There's these 2 euro pairs are pretty good entries. I can't believe the euro is going to be strong. Then again, I can't believe the pound's going to be strong. We've got interest rate changes coming. So, there's no reason for one of these to be bigger or bigger and stronger than the other. So normal market structure on this, continuation to the downside. So that looks like a pretty good entry for a short today. And Euro New Zealand as well. Both pretty good. That one has just broken back up. So we started to roll over. But you could read that as well. So it's a bit of a tricky one, the Euro New Zealand. It is just sideways at the moment. Not really going anywhere. Pound US dollar. I got out of some of this on Friday on the spike. So I took a partial on Friday. Or was it Thursday? Thursday or Friday? Friday. So, I'm long at the moment. And I don't really have a problem being long on this at the moment. But the interest rates on Thursday are going to obviously decide the direction of the pound. So I'll be adding more back in if we push back down and retest that low again. So this is where we're bouncing down at this double bottom. So you can see obviously targets to the upside. There is tons and tons and tons. So there's a lot more upside than downside on this. The dollar at the moment is all over the place. Trump will do that or that, depending on what he says. So it's impossible to give a direction on this at the moment. We're dropping interest rates in September with kind of 80% clarity now. So yeah, absolutely. US dollar should start to weaken, but the pound is dropping interest rates on Thursday, which is weak pound. So you've got a week against a week. But obviously, this isn't happening for another month. This is happening on Thursday. So it could go either way. And it's going to be really down to Trump. It's just started to roll over to the downside. So that is potentially on the cards. Head and shoulders, 90% of head and shoulders don't work. So easily back up there as well. It could go either way, basically. It's very, very hard to tell with the pound at the moment and the dollar. So, but obviously at the moment, bearish. We've been bearish for the last few weeks because Trump's got those deals over the line, and now he's screwing everything up again by starting a war with Russia and India and annoying everybody else. So more trade tariffs, more sanctions, more of the same, isn't it? Let's let everything calm down and get quiet and normal and everything's ticking along nicely. Let's chuck another firework in. It's basically what he does, isn't it? US dollar CAD. And lovely pullback on Friday. Again, US dollar. So these are both oil, both commodities. Oil is going to change price at some point very soon again, especially if we get sanctions on Russian and on India, basically to do with oil. So we have broken out, pullback. Does look like we're probably going to get a little bit more weakness coming in on that dollar. How far? Don't know. But yeah, that move on Friday is either a profit take, 38 retracement, basically, if you measure that. Perfect to the pip, pretty much, 38 retracement. So a lot of people will be looking to buy this here. But it's not extended for me, so it's not anywhere. It's nothing at the minute. Your sell was here. And obviously you would have been in a position short, which you would have got out of on Friday. So from a position trading perspective, it was an exit on Friday or today, whichever, if you got into it. But yeah, I think potentially a little bit of weakness coming into the dollar now. The market, obviously, on Friday, when we got the unemployment rate, you can see the market in no uncertain terms was, right, we are really piling into dropping interest rates. So it has pulled back and retested, and today we're just sitting around. So if it breaks Friday's low today, I think there's a very good chance of it continuing, and we go bearish dollar, which means pound US dollar up. So bearish dollar, definitely. If you look at all the news from last week, traders are piling in shorts on the dollar now. Speculative traders cut short dollar bets to lowest since April. And Kugler as well last week was right. So this is another potential fly in the ointment for Powell. Yeah. So Kugler resigning from the Fed board. Yeah. Trump has 3 people he's got in mind to slot into that position. Trump will be able to control one of the votes for interest rate decisions. So he's trying to take over a lot more control in the Fed. So that's an interesting development. Quite why that resignation is happening, I'm not sure. But either way, Trump gets someone put in there. So yeah, as you can see from last week, obviously, everybody, we're potentially going to get 2 cuts this year. So again, more bearish for the dollar, but yeah, the market's certainly dropping into bearish territory now. So yeah, down. That'd be a good resell today if we get there. That's Thursday's low. Euro US dollar, Euro CAD, Euro odd, Euro CAD. So I got out of my Euro CAD last week in full. No, I didn't get out in full, did I? I got out partially. So I'm still in this. I've still got 3 positions on it. I got out of the majority of it. Got out some of it there as well. But got out the majority of it last week. We're pulling back now. So market structure has shifted to the downside. We double topped, put in a lower high. A lower low. Potentially that's your lower high going in there, which is kind of 50% retracement on that leg there. So yeah, back down. Canadian dollar, difficult to call at the moment. Everything's difficult to call at the moment because it's all to do with tariffs. Everything is trade tariff related, which is screwing up interest rates. So you can't really say what is bullish and bearish at the moment. Europeans probably going to drop interest rates again. Canadians don't know at the moment. Really don't know what's happening with them, do we? So yeah, I don't see any reason why this shouldn't just come straight back down. There's no advantage in either currency. Neither of these is bullish or bearish at the moment. In fact, more bearish and slightly more bullish. So that would definitely be the direction. So I'm holding those shorts at the moment. If we can get a push down into this area here, excellent. If it does push up into propulsion, I'll be taking another short and adding it on, bringing the average up a little bit, and then I'll probably get out at the double bottom. Don't know. Wait and see where it goes. It's coming down today anyway. And Euro odd, very similar. Euro's not strong. Aussie's a real mixed bag at the moment. Sideways. There's nothing much to do on this. You had a signal short on it on Friday. You've had a couple of shorts. It's given loads of signals to go short. There's nothing. It's just not moving, is it, basically? So if you'd have taken any of those shorts, you're out. If you'd have taken that long, 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 you're out. It's going up and down. Sell it when it's up here, buy it when it's down there. There's no directional bias. Slightly more bearish than bullish, I would say, overall, long term. But either or, really. It's not going anywhere, is it? It's just sideways. So stick sideways. Can I look at gold? I can. There you go. I'm looking at gold. Morning, Nav. Sorry, sarcastic mode, Monday. Yeah, it's bang in the middle of nowhere. So there's your highs, there's your lows. You're there. Flip a coin. It can either come back down into here or it'll go up into there. Don't trade for the middle of a range. Trade from an extreme. It is extended to the upside. So again, depends what you think is happening with the dollar. Gold is basically the dollar. So if the dollar goes up, gold goes down. If the dollar goes down, gold goes up. So is the dollar going up or down? That's your question. It's, for the moment, going down, isn't it? So I would be looking to buy gold on pullbacks. So shorting gold on extensions is probably the most dangerous play. Not to say it won't work, yeah? So pull back into there. So you could short it today and get out down here. Be better off, I think, getting in down here and getting in long and coming up into those highs. Because the dollar, not really any reason why it should be weak. Okay, stopped out on FTSE. So that's banked. And in the partial close... Oh, sorry, that's a monthly high. That's not my partial. I was looking at that saying, why is my partial close not taken? Because the partial close is up there. Yeah, so FTSE, we're out of that. DAX, we're out of that previous monthly. That is the 1 month low. That's last month's low, basically, which is here. So, you know, that's basically that low. Is that? No, it's not that low, is it? That's the last month's low. Let me have a look at the DAX properly. Yes, that's that month's low. There we go. So there's your low from last month and last month's high. So, yeah, I mean, Friday we sort of popped out, didn't we, of the previous monthly low, just to do that gap fill. See any reason why we shouldn't push up today at all. So, yeah, I'm going to ride with it. In fact, what I might do, because obviously that's already banked, I might just move this down here, just in case we get rejection out of propulsion. It's not the greatest propulsion gap in the world. So this, whenever you see a propulsion gap that is not breaking a low, yeah. So this one here, that propulsion gap there, yeah. So you got that accumulation, and then it broke through that low. So that's a strong sell order and add, yeah. This propulsion gap here, that one is not breaking. It's I suppose it is breaking that low to an extent, so it kind of is, but then it just sort of flip-flopped around, didn't it? It didn't like break and retest and fly. Not great, but I mean, I guess technically it is breaking that low. If it was breaking that low, I'd be much more interested in it. But obviously, that is where the origin of the move was. So potentially we could get a sticking point there. Where we go. Right. There we go. That's all I've got for you today. So I'm back this afternoon. I am out today. I've got to go and pick up a car. So in theory, I'll be back for this afternoon's stream. If the car gets back, okay. If the car doesn't get back okay, I won't be here for the stream. But I'll put a message in Telegram. So keep your eyes peeled on Telegram. If I'm not here, that's why. Good morning. Will you keep trading indices throughout August? I don't know. I will keep trading indices as long as they make money. Yeah. At the moment, I don't think if you go back and back test through August and look at August's results, they're not much worse or better than anything else. The market will move when the market needs to move. At the moment, the market is moving all the time because of Trump. So I don't. Summer trading is a thing. The market volume and volatility slows, but it still reacts to news. We've got more news at the moment than ever because of Trump. So it's one of those scenarios where I don't think you're going to find it'll necessarily slow down. I mean, it's not slowing down today, is it? As long as the market's moving and it's breaking and it's got a direction, it'll work. All trading will work. It's when it goes like this, and this is what happens in summer trading. What you often find is the open is very dead. And the beautiful thing about this version of ORB, this particular EA version 3.1, is we have a filter for volatility. So we have the ADR filter. So if we are finding that the open is too small, we don't trade it. If we find that there's too much slippage at the open and it goes above the max range, we don't trade it. So we've got a volatility filter built in here, which means that if this isn't moving when the bell rings, we don't want to get involved because there's no volume, there's no volatility. The likelihood is we're just going to stop out. We're just going to get chopped to death. But, you know, it was quiet, and this is DAX is a great example today. The 5-minute range was too quiet. The first 10 minutes was too quiet. After 15 minutes, we had some movement starting. So we took it. Yeah. If those are, you know, if that's too small, don't trade it. So if you do the back testing with ORB 3.1, you know, you'll find that there's not a lot of difference. August, I didn't find any seasonality really in back testing. I don't check for it too much, to be honest, but I did check it because obviously I put everything through strategy quant, through quant analyzer, and it tells me seasonality. There is no seasonality, so no reason to stop. But if I identify a week of that and P&L doing that, probably reduce risk. So, you know, you can't win every month, basically. So there's always losing weeks, always losing months. So, you know, you're going to get big days where you just go into rotation and it's not going to work. If you see multiple days with multiple large losses, that's when you kind of want to take the foot off the accelerator. But the beautiful thing about, again, ORB 3.1 is it will, the loss recovery system will kick in and regain that. So what you'll find is you're going to draw down and pain for a few days, and then you get back to where you were before. That's the point you can make the decision. Actually, I don't fancy it. Long on the FTSE. Partial, I'm going to move that down just to make sure I get it in. So I'm just moving that right down there. So I'm going to take a partial on the DAX. Only reason being is because I'm now long FTSE. So I want to take that money from the DAX, put it in the bank, because if it now pulls back and the FTSE pulls back with it, the FTSE is going to stop out with a full loss. So I want to make sure that I've got 2 partials in the bank, and that guarantees a profit for the day. But if the FTSE now rallies, so FTSE upside target, I mean, that's Friday's high. But that's before the open. So if you look at Thursday's low, I mean, it's just a mess, isn't it? This whole section's a bit of a mess. So why not come up and test that propulsion? Looking for a move up into there on the FTSE. If it goes bull. The trouble with taking a V-shaped recovery long is you've got a pullback potentially coming. So you're getting in at the time you may be getting a pullback, but we'll bank that. And then at least the loss is paid for if it does pull back on the FTSE. But we'll have a look at this afternoon. I don't think seasonality works for now because we're in a transitioning phase of global order. Yeah. I don't think I've never used seasonality. no one's ever shown me data that says is any use. Basically, all the people that use seasonality tends to do is they say, typically during this time, this is not a good symbol to trade, or this is not a good strategy to use. Therefore, stop. So if you only have one strategy and seasonality tells you that those 2 months of the year that don't work, what are you going to do? Take 2 months off and not pay your mortgage? You're not. So I never pay attention to seasonality because it's what you make of it. Because a market goes quiet doesn't mean you can't trade it. It just means you don't trade it in the way you trade a highly volatile market. You have to just trade it differently, don't you? So all seasonality for me is make sure you've got diverse strategies in place. So mean reversion strategies as well. But I don't know. So it's like there's so much I'm seeing on Facebook at the moment. So many posts from all these Bitcoin traders saying it's altcoin season. Look what happened last time. Look what's going to happen this time. $100 is going to make you $1 million. Blah 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 blah. You don't know anything about anything to do with anything because this is not 2020. This is not 2021. It's not 2024. This is 2025. We've got a new bloke in charge of everything to do with financial movement. Yeah. There's one man with orange hair, lives in America. He has boomed and busted this market bigger than it's ever had. He's made the biggest day of winnings, the biggest day of losings ever in the NASDAQ. How did he do it? Opening his mouth. It's got nothing to do with what happened last season, last year, last quarter, whatever. Irrelevant. Today's today. Today's different to yesterday. Trade it. Trade what you see. If you see the market breaking out, you see the market moving, go with it. If you see the market doing that, mean revert it. You have to adapt to it. There's no point in saying it's a bad time to trade. It's a different day to trade, a different strategy based on what you see the market doing. You're either going to be right or wrong. It goes up and goes down. So when you press that button, it's going to go with you or against you. Nothing's changed, is it? It's now August, not July. You can't, this is why I've never bothered with it. I don't think it helps you as a trader do anything differently. Because if I suddenly go, right, August is typically quiet, I'm only going to trade mean reversion. If I see breakouts happening constantly, it's going to drive me mental. Trade what you see happening. You're not going to know what's going to happen until you do it. This is the thing. It's why it's so hard, isn't it? When will you release ORB 3.2? There isn't an ORB 3.2. What's the point in releasing an ORB 3.2? 3.1 works. All it is a version number of software. There's no bugs in it. There's nothing to fix. Therefore, it's going to stay like this forever. There is no 3.2. There's nothing to add to it. I'm not going to enhance it. This is, as far as I'm concerned, as perfect a system and strategy in EA as you can get. The only reason I would change that number is if something changes and I need to change something in here. If I spot a spelling mistake and I need to change it, we'll get 3.2 because it'll have a different spelling or something. I'm not changing any functionality because why would you want to change something that generates that? It works. The only reason we've got 3.1 is because I wanted to introduce a volatility filter to the old version, 2.7. So that's the only reason we've got this version is because I wanted a volatility filter built in based on ADR. So, thought you just mentioned something. No, I don't think so. I don't think I mentioned something, but I don't know. My mind doesn't work like that. As soon as my mouth has said something, it's completely forgotten what it said. It just splurts what it sees. But there's no plans to change it, no, at all. It works. Stick with it. The trouble is, every time you change something, if, for example, I introduce a new feature into this, yeah, on average, robustness testing a strategy takes me about 2 weeks. So if I say I'm going to introduce a new feature that does this, I'm going to have to system parameter permutation test that new feature and robustness test that on all indices over multiple weeks. So every time I change a version, it takes me 2 or 3 weeks of work. Unless that new change is going to dramatically improve what I've got, there's no point in doing it. There's just no advantage to consistently changing something. Yeah, you're never going to squeeze more than X out of a strategy. Yeah, there's strategies. The only way you improve a strategy really is to change the risk reward mechanism of it, or apply a filter which improves its strike rate. Other than that, it's very, very hard. This is a breakout strategy. There's no filters you can really add to breakout strategies apart from volume and volatility. You can't add trend because it's breakout, because breakout's happening in both directions. So which way it's going is irrelevant. If you say, oh, market's only going up. So this is a good example. You can't add a trend filter to this. Yeah. So we're trending up. Yeah. Whoops, whoops. 2 of the biggest days I've had in the last quarter. Yeah. Wouldn't have been taken if I had a directional filter. I would have missed that. Yeah. You'd have missed that. You'd have missed that. You'd have missed that. It's probably a news event, that was. But you'd have got that. Lovely. Excellent. Excellent. Doesn't matter what you did there. Didn't work. Would have got that. Would have missed that. Would have got that. Doesn't matter what you did there. Would have missed that. Would have got that. Probably if you add up what I just said, it's roughly 50-50 as to whether it breaks long or short every day, isn't it? That's the edge. We don't decide the direction. There's no point in adding a filter for direction to a breakout strategy, because a breakout strategy's edge is momentum. Momentum happens in 2 directions. So, there's nothing you can really add into this type of strategy that is going to improve it. You might be able to squeeze a few extra % on average over a 10-year back test, but it's just not worth it. This is why people struggle, I think, in strategy development, because they don't realize that there's 3 strategies you can trade. You either trade a breakout, you trade a trend, or you trade a mean reversion. There are only 3 strategies that exist on this planet. That's it. Yeah. There's 3. I don't care. You can come to me with 100,000 strategies. I will tell you which of the 3 they are, because there are only 3. The market is either doing this, it's doing that and failing, or it's doing that and working. Yeah. So it's breaking out, it's mean reverting, or it's trending. That's all it ever does. Every instrument on every time frame forever has done that. So there's 3 strategies. Breakout strategies, usually around about 30 to 40% strike rate. So if you've got one that sits anywhere up near there, you can't improve it. Trend strategies, usually around about 30% strike rate. Yeah. So if you've got something around about there, sort of 25 to 30%, if you're up about there with your trend strategy and you're getting somewhere in the region of a 5R on the trades that work, you can't improve that, because that's what it does. You cannot get trend strategies with more than 30% strike rates and roughly an average 5R return. Yeah, the 5R pays for the 70% of losers. The way it works. With a breakout strategy, you're looking at somewhere between 2 to 3R on a 40% return. That's why it works. This is what an edge is. An edge is a higher return on drawdown. Yeah. With a mean reversion strategy, somewhere between 70 to 80% strike rate is what you should be aiming for. If you're somewhere around about there with your mean reversion strategy and you have a 1.5R return, happy days. You can't improve that. You can't really improve that. But if you could find a way to increase your 1.5R on that strike rate, that's where the improvement in strategy comes. All the strategies I've developed fit those criteria, and no one's ever come to me with a 70% strike rate trend strategy. If they did, they wouldn't be coming to me. They would just be sitting there making billions and billions of dollars. It doesn't exist, because the way that trends work means that you cannot get that strike rate, because for a trend to have happened, you have to have missed the start of it, which means you can only extract a portion of the center, and that is determined by the time the trend lasts. You will never get out at the top of the trend, which means that you will always extract the middle. The middle is never going to give you more than around about 5R, and you will get it wrong most of the time, because most of the time the market spends in mean reversion, which means that every breakout is a failure. The mathematics for trading are hard-coded. They cannot be changed. So when you find a strategy that on a breakout that has an edge, you trade it. There's nothing you can do to really improve it, apart from adding volatility. And this is one of the key things with breakout. Breakouts require momentum. Momentum is based on volume and volatility, so you can filter for that. But how far it's going to go, how far this is going today, is an R multiple. It's random. So I could say, and my back testing and permutation testing has shown me that a 2R return is an average. That's what you use. Use the average. If you want to go for higher than average, your strike rate drops. If you go for lower than average, your strike rate goes up. But your profitability on all three of those won't change. You'll still get roughly the same return. It's the maths. It's all to do with maths. That is going to be achieved more with a lower return, a lower yield. That will be achieved on average with a medium yield. That will be achieved lower than average with a higher yield. You multiply these together, you will come out with roughly the same dollar amount at the end of a year. So how do you improve on it? You can't, because the statistics don't allow improvement. This is why people, banks and institutions, roughly make the same amount of money every year, because there's only a certain amount of ways you can make money out of a market. Yeah, it's all about extracting money from market movement. It's not about timing everything right. It's not about knowing where it's going. It's not about any of that. It's about extracting money from movement. If you could time the market and understand when the market's going to move, you would be a billionaire overnight. But you can't, because it's random. Everything's random in this market. This price action you're seeing here on the FTSE has never happened before, ever. This price action you're seeing here on the DAX has never happened before. Completely new. There's not an algorithm on the planet that can tell you where this is going, because it's never seen it. So how can you tell where it's going? Unless you've got a crystal ball, you've got nothing to go on in the past, because it hasn't done this before. The edge is the fact that you have a risk and a reward, and that is higher than that. The statistics are that this happens 40% of the time. So as long as that is above 1.5, I will make money long term. As long as it keeps doing what it's always done, which is breaking out with a strike rate. Other than that, I can't tell you which day is the best day to do it, which season is the best season to do it, and I can't tell you which is the best reward or risk to use. I can't tell you what's the best average daily range volatility filter to use today, because every day is different. Go back to streaming every day, please. Just the London session and Monday, Wednesday, Friday US session. No. I have a life. I also want to do my own thing. I think I'm going to call it. Just because I've got to go out and I don't want to babysit this morning. So I'm just going to bank that 1800. I'm out I'm out all morning, basically. So I don't want to be sitting here. I don't want to be out worrying about that. So I'm just going to close those out. I think there's a lot more distance on that, but likelihood is I was going to stop out on the pullback anyway. And that one, I'm a bit worried about that price action. We've broken out, and for the last 15 minutes, we're going nowhere with tails up into that propulsion. So it's not looking good price action wise. But again, this is why you make money, isn't it? Decisions. Discretion. Very hard to teach discretion. How's the website going? The new one, I don't know. It's all the members have got access to it. I don't know if they've had any feedback yet. No one's fed anything back to me yet. So, but then again, it's not my email address it goes to. So, members haven't really. No one's mentioned anything about it in the member streams, in the members channel. So since I posted the details, literally nobody's said anything in there. So no one has actually, I don't know. It's the honest answer. I don't know how it's going. It's working and I'm using it every day. Does your EA work on MT4 Renko or range bar charts? I've no idea. I don't use Duplo blocks. So traders use candlestick charts. Sorry, mega blocks. Oh my God, that's not what I asked for, was it? I said Lego versus Duplo. There you go. So traders use Lego. Babies use Renko. Yeah. So they're like big blocks that say buy, sell. If you want to understand what's going on with price action, you need to see more than a block. That's all I'll say. Before I get into a fight, I have no idea if my stuff works with them because it's not built for Duplo baby blocks. Try it. Download the demo. Try it. That's all I can say. I sent 2 feedback mails to the website. Did you? They haven't come through, as far as I know, because they said I haven't had any feedback from your guys. Maybe the email system's not working. I'll have to let them know. Do you know what? It's one of those things when you're kind of involved in something. This is probably why I didn't go into business with anybody any time in my life. When you're involved with someone else in a website or a project, they do things in a certain way. And when you're kind of brought in as a sort of consultancy role, you can't tell them what to do because it's not your website. There's a lot of things I would have done differently on it, but it's not my website. And I tested a lot of stuff on it and I was like, well, this is broken. Why is this broken? This is obvious why this is broken. Oh, we haven't looked into that yet, but it's massively important. I think one of the things was when we looked at it, when we did the members stream, I tried to log into the website or sign up as a new member and then upgrade my subscription. It didn't let me. And it didn't let me because they hadn't put email validation in. So basically, when you signed up, you could sign up with your email addresses, blah, 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 not an email address. Stripe, the payment provider, requires an email address for validation. Yeah, so I couldn't sign up. I couldn't continue. And I was like, well, why did you not do that? That is bog standard Web 101. When you are when you're signing up as a member, you have to have an email form which is validated. The field for email has to be valid. Otherwise, what's the point? They didn't even do that. So I said, there's a lot of things that are broken on here that need fixing before we sort of give this out to people to test it. And they just wanted to do it. So I'm not surprised if the feedback form doesn't work because they said they haven't had any. So I will test that form. Yeah, I don't know. I answered to the tester group inviting email. There was the information we can use to address this for sending feedback. I answered to the tester group inviting email. What's that? Tester group inviting email. Are we talking about the same website here? The one that we covered on the member stream. I didn't give you an email. I did the testing. I showed you the website and I put it in the chat. You didn't get invited. I got 2 emails when registering. Yeah, that's not an email address. I'd like to show you now because I don't want to show everybody the website, but there's a feedback form on the website. There's a bug feedback button in the navigation. That's what you use. I covered it in the member stream. You have to use that button. That email that they send out is not connected to a mailbox, I don't think. They won't get that. You need to use the button. There's a bug button. I covered it. Remember I said, any problems you find, this is the first thing I covered. The reason you're given this is because they want you to press this button and give feedback, Mumble. Not email back to the bounce back email. That is for, yeah, no, okay. You're not able to send screenshots of that button. Well, no, I know you're probably not, but just describe the problem. And they can then come back to you if they want to. I don't know. I'm fast losing the will to live, to be honest with it. It's a great website. I'm using it every day. I've been using the EA builder in it. The news analysis system in it is brilliant. I've been using that. I'm using it to monitor all my trades. So, my account is feeding the EA. EA is feeding all my account data up. That's great. So there's a lot of good things about it, but there's a lot of not so good things, I think. I think it's a really good idea. Difficult execution is the way I would put it. And it's quite, what they're trying to do is actually quite a big task. But anyway, we'll see. But yeah, they won't have got those emails because there's no mailbox. I think the emails go from emails.domain name, but that's just for sending out registration emails. I don't think there's a reply on that. I'll have to check. I'll ask them. I'll tell them that because they won't be monitoring that mailbox, I don't think. So I'll tell them that. That maybe would explain why they haven't been getting feedback. Anyway. Right, I will leave you there. Obviously, news-wise today, there isn't any. So there's nothing scheduled to worry about. Obviously, do worry about what comes out here. Obviously, Trump will be awake at some point today. We'll be saying stuff. So the Russian thing, I think, is Friday, I think, is the deadline on that. So if basically Putin hasn't completely ended the war in Ukraine and sorted it all out by Friday, obviously there's plenty of time. But if he hasn't, he's going to get more sanctions, and they will be to do with oil, and that will drive oil price up again. So, just keep your eyes peeled on that because there's a likelihood that might be a pump at some point this week. But I'm fed up with it. I'm fed up with it at the minute. I don't think position trading oil is the right thing to do. Short term, yes. Position trading, no. So I think I'm going to just pull out of that one ASAP. Right, so I'll be back this afternoon at 2:30, fingers crossed, assuming that everything goes okay with picking up the car. Other than that, have a good day. And if you're not back here, I will see you on either Wednesday or Friday morning. Have a good one.